a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about ETFs that focus on free cash flow. Now, we know that in the current environment of surging inflation and potential economic slowdown that could result from the Fed's efforts to tame inflation, that continues to weigh on investor sentiment. And in this kind of environment, usually cash-rich companies tend to outperform because cash is king. As we know, these are high-quality companies with strong business fundamentals, and investors have been putting a lot of money in these cash-rich companies, and they have been dumping companies that are burning cash, that have negative free cash flow. So according to legendary investor Warren Buffett, free cash flow is the most important metric for valuing a company. And these ETFs, there's a good suite from Pacer. They have gathered almost $6 billion in assets over the past year. And there are some other providers also that have ETFs that focus on free cash flow and some other metrics, but Pacer ETFs have significantly outperformed those other ETFs. So that is why I'm focusing today on Pacer ETF suites. And these focus exclusively on free cash flow. So the first fund that I'm highlighting is called COWZ. They have very interesting ETF tickers as well. So Pacer US CashCows 100 ETF. This holds 100 US companies with strong cash flows and very healthy balance sheets. Free cash flow weighted, very popular with 6.4 billion in assets, has gathered a lot of assets lately and charges 49 basis points. To learn more about this ETF, you can go to the quote page on Zacks.com. Read our research report articles, nice dividend yield too. You can use the link to go to the Pacer website. And before I go to the web page for that particular ETF, I wanted to show you this. They have got research on why free cash flow is important. So free cash flow is the cash which remains after the company has paid all its expenses, interest, taxes, and some long-term investments. And this free cash flow can be used to either buy back stock or pay dividends. And we know that companies that pay juicy dividends are very popular with investors lately. And that free cash flow can also be used for mergers and acquisition. So if you're interested in free cash flow metrics, so please go through the research materials. Now going back to the COWZ ETF. So this is the ETF which uses the Russell 1000 index and then selects 100 companies with high free cash flow yields, and then those companies are weighted by free cash flows. Now looking at the portfolio for this ETF, you will see companies like Valero, Phillips 66, Occidental, EOG, ExxonMobil, ConocoPhillips. These are top holdings in the ETF, and the reasons are not difficult to understand because energy companies, they have been generating a lot of cash in the past few months and also returning a lot of cash to investors. So that is why they are appearing as top holdings in this ETF. Looking at this sector exposure, healthcare, energy, consumer discretionary are the top sectors in the ETF. The second one from the suite that I'm highlighting, it focuses on global companies from the developed markets that have strong cash flows and healthy balance sheets. This follows a dividend weighting schemes, slightly more expensive because of international exposure, 60 basis points, and smaller too with 519 million in assets. So again, to learn more, you can go to the quote page on Zacks.com. This has a very juicy dividend yield of almost 4%. And then you can go to Pacer web page for this ETF. So this uses FTSE developed large cap index of 1,000 companies, and then it uses free cash flow and dividend screen to select 100 companies, and those companies are weighted by dividends, and there are certain caps too. ExxonMobil, Chevron, and Shell are the top holdings. And if you look at the sector exposure, materials, healthcare, energy are the top sectors. US has about 33% weighting in the ETF, then UK, Japan, France, Australia, and other countries. The third one that I'm highlighting is if you want to get exposure to all these cash cow ETFs, again, very interesting ticker symbol HERD. So this holds cash cows ETFs and equal weighting. This is quite small, so be careful. Use a limit order if you want to buy this ETF, and slightly expensive too, 73 basis points in expense ratio. So this, again, if you go to the web page, you will see what it holds. So COWZ, which is the small cap cash COWZ ETF, and CashCows Growth ETF, Global ETF, International Developed Market ETF. These are held in almost equal weights in this particular ETF. On the last slide, I have the comparative performance versus the S&P 500 index. So you will see that the the largest ETF, COWZ, that is up almost 25% in the past year. The second ETF, the Global CashCows ETF, that is up about 19%. The fund of fund ETF, that is up about 11%, whereas the S&P 500 index is up a little less than 6% over this period. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, and I'll see you next week.